To begin, the agenda for this webinar will be as follows: recommendation, nature of business, financial review, divisions, company guidance, and lastly, portfolio guidance. Let's move on to the recommendation. We recommend an exposure of 0%. The company has 7 core divisions that are well diversified with a blend of defensive, cyclical, and growth assets. In addition, good market share through dominant positions owing to a broad product offering. The group boasts an impressive historic ROE of around 19% and historically good cash flow. We can expect the group to continue to acquire quality companies as opportunities arise and to drive further efficiencies out of existing operations. Its financial position remains robust, with financial gearing still below the conservative self-imposed targets. In the current environment, cost management will remain imperative to mitigate subdued activity levels, while improved results from underperforming operations should further aid the group's earnings growth in the year ahead. Trading at a forward PE of 13 times and 2.6 times as net asset value, we feel the share is fairly valued and would advise shareholders to hold the shares. The share price is underpinned by a dividend yield of 2.9%. To move on to the nature of business. The Bidvest Group Limited is a leading South African trading, distribution and service group operating in the areas of commercial products, electrical products, financial services, freight services, office and print solutions, outsourced hard and soft services, and automotive retailing. To move on to the financial review. Revenue increased 4% to 71 billion rand, of which 1.7 billion rand was from the acquisition of Brandcorp. Due to the disposal of Manacor, revenue reduced by 1.3 billion rand. Excluding the effects of Brandcorp and Manacor, revenue on a like-for-like basis increased 3.5% to 70.6 billion rand. Gross profit increased 4% to 20.7 billion rand. Gross margin remained largely unchanged at 29.1% from 29.2%. Gross margin was supported by the higher margin Brandcorp business, being offset by low margin trade flow in the financial services business and a deterioration in margins at Bidvest Namibia, owing to a tough operating environment. Operating profit before depreciation increased 4% to 7.3 billion rand. Operating costs increased by 3.6%, but on a like-for-like basis, these costs increased 1.7%. Depreciation increased 3% to 1.6 billion rand. Operating profit was 4% higher to 5.7 billion rand. Income from associates improved 40% to 566 million rand, where strong profitability gains at Adcock Ingram and Comair were noted. However, the insurance investment portfolio yielded a lower return due to the prior period. EBIT was 6% higher at 6.2 billion rand. Net interest expense was 15% to 1.1 billion rand on the back of higher net debt due to the Brandcorp acquisition, as well as a higher weighted average interest rate. Profit before tax was 5% higher to 5.2 billion rand. Taxation expense edged up 5% to 1.4 billion rand. The effective tax rate is unchanged from the prior period at 29%. Headline earnings attributable to outside shareholders decreased 38% to 99 million rand. Earnings attributable to ordinary shareholders improved 6% to 3.7 billion rand. The weighted average number of shares in issue increased 1%. Diluted headline earnings per share was 5% higher to 1,103 cents. A final dividend was declared of 264 cents, whereas in 2016 this was 232 cents. To move on to divisions. Bidvest South Africa contributed 93% to revenue and 94% to trading profit. Revenue increased 4% to 69.7 billion rand. Trading profit increased 6% to 5.6 billion rand. Trading margin remained largely flat at 8.1% from 7.9%. Average return on funds employed came in at 32.3%, a decrease of 80 basis points. In services, revenue increased 6% to 13.1 billion rand. Annuity-based businesses performed ahead of expectations. In the security and allied clusters, Protea Coin was a strong performer. Bidvest Facilities Management achieved good results due to several new integrated contracts being secured. Security's comprehensive product offering more than offset the margin squeeze in traditional guarding. Bid-Air delivered good results. Travel and project-based industrial activities saw profits below the prior period. Trading profit increased 3% to 1.58 billion rand. Trading margin decreased to 12% from 12.3%. Average return on funds employed came in at 76.8%, a decrease of 470 basis points. In freight, revenue decreased 17% to 5 billion rand. On a like-for-like basis, by removing the effect of Manukau, revenue was up 6%, supported by high liquid volumes and the uptick in mineral exports, especially copper, chrome, and manganese, which came off a low base. The increase in petroleum products was aided by the new Puma fuel tanks in Richards Bay. This was slightly offset by agricultural volumes performing below expectations. Air freight volumes contracted due to pressure in consumer spending. Trading profit increased 5% to 1.07 billion rand on the back of excellent cost control. Trading margin increased to 21.5% from 17%. Average return on funds employed came in at 53%, a decrease of 490 basis points. In automotive, revenue increased 1% to 24.2 billion rand, where in Bidvest Automotive, the new vehicle dealer market contracted by 8.2% as it faces extreme pressure. The improved product mix was critical in offsetting the new vehicle sales declines, where used vehicle volumes have stabilized and related activities have reflected strong growth. Non-performing franchises and dealers were exited during the year. Bidvest Car Rental secured rental rate increases and grew volumes. However, fleet utilization was lower and accident incidents and costs were higher. Trading profit decreased 2% to 663 million rand. Trading margin decreased to 2.7% from 2.8%. Average return on funds employed came in at 17.3%, a decrease of 20 basis points. In office and print, just a note here that year-on-year comparisons are distorted owing to the non-reoccurrence of the Tanzanian voter registration and the disposal of Coloc Mozambique. Revenue decreased 4% to 9.7 billion rand, where volume declines and pricing pressure on Coloc were highlighted. In addition, margin erosion and the impact of foreign exchange effects were cited at Konica Minolta. Walton's turnaround strategy is yielding gains. Silverray, Packaging and Zonke performed well. Trading profit decreased 7% to 658 million rand. This is after trading profit was already down 14% at half year. Trading margin decreased to 6.8% from 7%. Average return on funds employed remained flat at 27.9%. 3 bolt-on acquisitions in the paper and printing areas were concluded. In commercial products, revenue increased 34% to 8 billion rand. Good results were noted in Bidvest Materials Handling, Academy Brushware, Plumlink, Rentec, Burncrete, and Home of Living brands. Headwinds were experienced at Yamaha. Trading profit increased 49% to 689 million rand on the back of Brandcorp performing in line with expectations. On a like-for-like basis, by excluding the effect of Brandcorp, revenue and trading profit both increased by 4%. Trading margin increased to 8.6% from 7.7%. Average return on funds employed came in at 30.7%, a decrease of 150 basis points. In financial services, revenue increased 20% to 4 billion rand. Trading profit increased 7% to 625 million rand, owing to a meaningful contribution from Bidvest Bank, where corporate advances increased 27%, deposits increased 17%, growth of 15% in the leasing business, and an improvement in treasury forex margin of the trading and investments business. The bank reflected significant improvements in key banking ratios. The insurance cluster saw positive operating performance, where premiums grew 97%, while net premiums grew 15%, mainly in commercial and personal lines. Insurance assets increased 23% to 1.8 billion rand. However, insurance was impacted by declining returns in the investment portfolio. The insurance investment portfolio yielded 15% less compared to the prior period. Compendium saw an 88% increase in trading profit year on year. Trading margin decreased to 15.6% from 17.5%. Average return on funds employed remained flat at 19.6%. In electrical, revenue increased 5% to 5.7 billion rand. Trading profit increased 10% to 350 million rand. Trading margin increased to 6.2% from 5.9%. This was despite a challenging environment in infrastructure, construction, and mining. Growth was achieved in Capstrut and Electech, while Voltex remained flat. Voltex MV-LV solutions, Verselect cables, and solid-state power achieved excellent results. New diversified businesses, Eagle Lighting, Mubello, and Technilamp, are focused in niche markets, which should, per management, add value going forward. Average return on funds employed came in at 19.5%, a decrease of 70 basis points. Moving on to Bidvest Namibia, this contributed 5% to revenue and 1% to trading profit. Revenue decreased by 2% to 3.8 billion rand. Trading profit decreased 71% to 86.5 million rand. Trading margin decreased to 2.3% from 7.7%. The poor performance was on the back of a difficult macroeconomic environment in Namibia. Bidfish saw a significant decline in prices and higher quota buy-in prices, which in combination with limited quota allocations resulted in profitability suffering. All divisions reflected pressure on revenue. Trading profit was down on all divisions except for properties. Per management, various cost initiatives have been implemented. Average return on funds employed deteriorated significantly to 5.6%, a decrease of 1,220 basis points. To move on to Bidvest Corporate, this contributed 2% to revenue and 5% to trading profit. Revenue decreased by 8% to 1.6 billion rand. Trading profit increased 85% to 298 million rand. Trading margin improved to 18.7% from 9.4%. UK businesses of Mansfield and On Time showed good improvements. Bidcorp showed a positive mark-to-market adjustment. The investment in Mumbai International saw an upwards revaluation, which aided performance of investments. Average return on funds employed came in at 18.7%, an increase of 930 basis points. During April 2017, Bidvest disposed of approximately 50% of its holding in Bidcorp shares. In addition, investments in cargo carriers and Cullinan, etc. were monetized. This yielded a total of 773 million rand. To move on to company guidance, management has highlighted the macroeconomic environment in South Africa remains a major concern. Trading conditions is expected to improve marginally in the next year due to improving economic conditions, as well as higher commodity prices and improving consumer confidence. Management remains confident of South Africa in the medium term. Focus on non-core assets, especially in corporates and Namibia, has been stressed. This should result in a non-core portfolio cleanup, where management has said that this should be done in a value-accretive and responsible manner. Significantly reduced fishing quotas remain an ongoing concern in Bidvest Namibia, where the company has been selling off vessels to reduce unproductive capital. The property portfolio is to be restructured in a tax-efficient manner. Bidvest's strategy of acquiring bolt-on companies that add additional value to existing Bidvest entities is continuing. The company retains adequate headroom to accommodate larger acquisitive and organic expansion opportunities, which management are actively seeking, both locally and internationally. Net debt to EBITDA and EBITDA interest cover are, per management, comfortably above the group's conservative targets, which support such opportunities. In addition, management has highlighted their intent on the company to add annuity-type income streams and to internationalize services and commercial products. There is concern surrounding government departments, state-owned enterprises, and parastatals, where the finalizing and closing of contracts is challenging. The lack of industrial project-related work is weighing on some businesses. In the automotive and office and print divisions, demand is subdued. To move on to portfolio guidance, Bidvest has a capped Swix all-share weighting of 1.11%. We maintain our neutral guidance and would recommend an exposure of 0%. In closing, if you'd like to place a trade, please contact our trading desk. In addition, should you have any questions, please feel free to email us. That brings us to the end of this webinar. Thank you for attending.